Yeah, hello. As Amy mentioned, I'm Neil Young. I'm the managing director of Elixir Energy, which is a gas company and the first petroleum company to talk at this conference. I'm sure the minerals guys have been very effective at talking about how their commodity prices have been doing well recently, and so has ours. In Eastern Australia, we've seen some spot prices that are as high as they've ever been. In America, the Henry Hub price is above $3 for the first time in many years, and could go higher as we go into the northern winter. The LNG price in Japan is very high, and throughout the world, in fact, we're seeing a lack of supply, strong demand for gas, and I think in the medium to longer term, our project's going to benefit from that. Okay, so let me talk about our company, Elixir Energy. So we are focused on one asset. It is a 100% owned coal bed methane or coal seam gas, as it's known in Australia, production sharing contract or PSC. It's located in the South Gobi region of Mongolia. We have a highly experienced CSG team in Australia, which is the global leader in CSG. And over the recent years that we've been operating, we have been transmitting those skills to Mongolia and adding to our local team there, which has been fundamental to our ability to keep operating through the darkest depths of COVID in the last year and a half. We're located on the Chinese border. The infrastructure is surprisingly good if you don't know this part of the world and you assume the Gobi Desert is just a desert. In fact, it has roads, it has mines, it has transmission, electricity assets, and there are planned pipelines from Russia through this region to China. China is obviously the world's largest energy importing market, and our ultimate goal for when we prove up a large enough gas resource. But there are many other market options on the way to that goal, which I'll elaborate on later. We have a strong balance sheet that's funding an aggressive program, which we've expanded this year. And as I say, we are managing to do that through this COVID situation just now. So here's to our capital structure and board. We have about 900 million shares on issue. Current market cap is a bit north of 200 million. Very pleasingly, we have nearly $33 million in cash as at 30th of June. And given our cost structure is low at both corporate and exploration levels, those funds keep us to the good for many years to come. I mentioned the team are highly experienced in coal seam gas, and that's demonstrated no more by than one of the godfathers of the sector, if I can call him that. So Richard Cottee led QGC famously from 20 million to a nearly $6 billion takeout in Queensland just over a decade ago. My background in CSG was also honed in the rise of CSG in Queensland. I was a business development manager for Santos and was part of the team that stitched together its asset base that now, in fact, exports CSG to Asian markets. One of my colleagues then was Stephen Kellerman, who founded and ran Santos's coal seam gas business, one of the world's technical experts in coal seam gas. He's also an ed on a peer of ours called Galilee Energy, who operate in Queensland. Last but not least, Anna Sloboda comes from Belarus, which is the other end of the ex-USSR empire from Mongolia, but with a lot of cultural similarities between the two countries. Russian speaker and has worked in China, strong financial background. So location, here's a map of Mongolia. It's a very big country, but it only has 3 million people. Its population density is as low as anywhere in the world. As you can see, our license to the south of Mongolia, located just north of the Chinese border. And just to the south of that is the main pipeline transmission spine of China, which runs all the way from the Caspian Sea in Turkmenistan through to the east coast, and which runs about 400 kilometers to the south of our license. And in gas pipeline terms, that's a pretty short distance. The terrain is easy. It's flat rolling steppes. There aren't mountains or substantial river courses. There is the dotted blue line there representing a pipeline project called Power Siberia 2, which Gazprom planned to connect gas resources located in northern Siberia and take those through to Beijing. It's a very large project. Those projects tend to take a long time to come to fruition. Our PSC area is large, it's 30,000 square kilometers. Just to render it into something understandable, that's about the size of Belgium. Now, with size comes large resource potential in a proven Permian basin, and we have here a risked best case of nearly 15 trillion cubic feet of gas as a prospective resource. So now moving to the project. The large prospective resource, that's the undiscovered but potential gas that we could recover, is nearly 15 trillion cubic feet. Now, we have started to move that prospective into discovered but contingent resource in the first area that we had success, and we have independently booked an initial contingent resource, and we're now linking that to a first production and cash flow generating project involving electricity generation. That's a tried and trusted route for CSG to get to market and to prove itself. Happened numerous times in the CSG revolution that occurred in Queensland. And one of our MOUs is with a company with great experience in Australia called Clark Energy, also in China, in terms of installing gas engines that can run on coal seam gas very effectively and generate electricity, and then in a modular sense be built up. We've also got an MOU with the Ministry of Energy, which is a facilitator to enter into the Mongolian grid. We have now a 20-well exploration and appraisal program underway in 2021. We've drilled 7 wells to date, and we'll provide the market an update on the last couple of those very shortly. I deploy a bit of a cliche, rinse and repeat, as our business model. Unconventional gas doesn't rely upon single wells coming good. We drill multiple very low cost wells. We seek to add resource by replicating exploration, then appraisal in various stages across the vast PSC area. The next stage of de-risking in the contingent resource area will be production testing. We'll commence that in the second half of this year. That will deliver extensive permeability and flow rate data, and will provide the platform then to a more sustained production testing program that we plan for next year, which will involve producing water, then gas, and if that's commercial, that will then lead to the booking of reserves. But of course, in addition to that, we will rinse and repeat in numerous locations across this Belgium-sized area, and that's what we're doing now as we speak, and we will plan to do so for the years to come. We have an expanded seismic program occurring in this year. We've already acquired 200 kilometers of 2D seismic. We have processed that and are now interpreting it. We're adding another 300 kilometers, and that's going through a regulatory process just now and will commence in the months to come. Seismic here is very low cost. We're not looking to image to 2 or 3 or 4 or 5,000 meters. We only want to image to around 1,000 meters. That means that costs are low. We use fit for purpose equipment. We're using a very effective Mongolian local companies who can operate in this area. And one of the beauties of the area is that there are no fences. It's flat rolling steppe, and shooting seismic here is as easy as it would be anywhere in the world. The intent of the program is to map sweet spots, bring forward drilling targets, and ultimately accelerate resource bookings. Our drilling program, as I mentioned, has been accelerated this year following our May capital raise. We now plan 20 wells in 2021. Some of these wells are exploration in nature. Exploration success are followed up by appraisal wells. We have very low cost stratigraphic wells, which aim to discover coals at coal bed methane bearing depths. We follow up with core holes, which measure gas content, gas composition, and measure the permeability of the coal seams. We have one rig working at the start of the year. We introduced a second rig a month or so ago. And this is all within the context of the global COVID situation, which Mongolia hasn't managed to avoid. That leads to various travel limitations from time to time, but our local crews are experienced in dealing with the required regulations, in keeping isolated, keeping communities safe. And although Mongolia has had COVID, it's been one of the global leaders in rolling out in vaccines. And ultimately, we trust that that vaccine program will overcome community transmission and things will gradually get back to a degree of normality as we enter 2022. Our drilling program is designed to add resource on a bit by building block basis. And in a success case, we aim to add a resource number of the sort of size that would be regionally relevant across North Asia. Now we have a 100% position. We can fully fund that 100% position for years to come. That gives us complete optionality in terms of whether we chose to bring someone in or not, as the case might be. Having a joint venture party involved is handy from time to time, but often can lead to a mismatch of objectives and mismatch of financing capability. And we're very pleased to have and retain a 100% owned position. We have an inaugural pilot program commencing towards the end of this year. Phase 1 will be stabilized water flow testing, which could see gas breakthrough depending on the extent of water. But ultimately, more sustained production will occur next year as we design facilities to cope with the fluids, being water and gas, that the pilot program will entail. Australian experience demonstrates different pilots are required for different locations and different geologies. Those skills adding to our local teams are vital in giving us the maximum chance to successfully prosecute a pilot program. So the opportunity in markets. China is the market. We believe that China is sensibly adopting a program that will lead to a net carbon emission of 0 by 2060 by bringing in significantly more gas into its energy mix. Some people are cynical about China's real appetite to move away from coal, but we see that genuine moves are occurring. President Xi a couple of months ago promised that Chinese coal use will decline in less than 5 years. PetroChina's parent CNPC has estimated recently that gas usage will increase by nearly 50% in 9 years, and then will accelerate after that. This month, in fact, today, China's introducing the world's largest carbon trading market. It will involve thousands of electricity producers for a start, and then gradually increase and add other energy sector participants. Mongolia's nearest provincial neighbor in China, Inner Mongolia, has excessive coal generation and needs to change its mix in order to meet the country's policy objectives. Now, the supply alternatives to China are multiple, but some of them face material challenges. Australia is currently the largest supplier of seaborne gas in the form of LNG to China, and that has remained stable notwithstanding geopolitical tensions, at least for just now. A couple of months ago, the Chinese foreign minister visited Turkmenistan, which is the largest supplier of gas to China by pipeline. That's nearly 4,000 kilometers away. And he indicated that he'd like Turkmenistan to increase production and supply to China. Now, a 4,000 kilometer pipeline entails rather more cost than a 400 kilometer pipeline from our location to the Chinese network would involve. There is an existing Russian pipeline which is accelerating production of gas to China. It's called Siberia 1. But in the Russian press recently, ex-Gazprom employees have expressed concerns about the sufficient reserves to supply that current pipeline. Siberia 2, which I mentioned, planned to go through Mongolia, is designed to take gas from a different area many thousands of kilometers away in northern Siberia, from an area I loosely call the Yamal Peninsula, which currently supplies Europe. It hosts numerous LNG projects, and question marks have to be raised as to its ability to also supply Siberia 2 in the volumes that have been mentioned. However, multiple market opportunities exist in addition to the dream to supply China by pipe. There's existing electricity transmission connecting the Mongolian grid and the Chinese grid that run through our acreage. There are large local needs. Rio Tinto's Oyu Tolgoi mine is inside our acreage. That is the largest electricity user in the country. It imports power from China. It needs to replace it legally with local power. Small-scale LNG is an option we are exploring. There's a vast truck fleet in the region which runs on diesel, which could run on LNG, as is the case in China, and that is also a market that is scalable and modular. Generation we're pursuing, it can be early stage, it can be modular, provides cash flow. In the longer term, there are plans to build a very, very large DC transmission network connecting renewable resources in the Gobi region through to China and even beyond into Japan and South Korea. Gas complements these things in this region, and we are pursuing that through a new venture we established at the start of the year, a wholly owned subsidiary called GOH Clean Energy. We're looking at the hydrogen potential here. What took us here in the first place was the cost advantages that methane has in Mongolia compared to Australia, which is in a region of $4 or $5 a gigajoule. Our analysis suggests that the hydrogen advantages are about 3 times that compared to Australia, and you can expect to hear more on this from me in the immediate future. We've imported a SODAR unit, which measures wind in a low-cost and effective way, and that process has commenced. Other options under evaluation, and again, watch this space. Our foundation of dealing with the government of Mongolia at multiple levels, from national to regional to local, are the foundation that we can use to build a renewables and ultimately hydrogen business. And we believe doing so will make this asset, a gas and renewables focused one, more attractive to the sorts of large energy companies that will see our strategic position as being increasingly exciting in the years to come. So our investment highlights, we started exploring in 2019 with 4 wells. We did 7 wells in 2020. This year we're moving to 20 wells. We've established—
One more minute, please, Neil.
No worries. We've established a rinse and repeat model. It's very low cost. We're fully funded for multiple years to come. And we think we can build a regional resource that is significant in the Chinese context. So that's about it. We have had great success. Our share price has risen a lot. We've raised money at favorable prices. We're fully funded for many years to come. We have a great team in the country. We've been working there for a number of years. I've been working there for more than 10 years. We're pointed towards the world's best energy market, and we're adding renewables and ultimately hydrogen to our methane mix. So thanks for listening to that. Anybody can contact me at any time through our website or through our phone number there. Please do so. Thanks for hosting us, Amy.